You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Thursday, September 27th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. First thing to know is markets digest Fed decision. Investors are digesting news that the Federal Reserve increased interest rates on Wednesday as expected. The Fed raised interest rates by a quarter point to 2.25%, its third rate hike this year and its 8th since 2015. In its statement, the central bank said it expected to increase rates a 4th time in December, with 3 rate hikes in 2019 and 1 in 2020. However, the Fed dropped the word accommodative to describe its monetary policy stance from its statement, leading some investors to speculate that it could be moving towards ending monetary tightening. Fed Chair Jeremy Powell said at a press conference that the language change doesn't mark a shift in policy. Instead, it is a sign that policy is proceeding in line with our expectations, he said. Officials also raised the median expectation for economic growth in 2018 this year to 3.1% compared with 2.8% at their June meeting. Meanwhile, investors priced in the chance of a 4th rate hike in December at 79.2% from 77.7% on Wednesday. Second thing to know today is global stocks are volatile after the Fed. World stocks were volatile as investors digested the Fed decision and looked ahead to a flurry of U.S. economic data. Third thing to know today is the dollar is boosted after the Fed and Italy budget row hits euro. The dollar gained ground against a currency basket in the wake of the Fed decision, with the U.S. dollar index, which measures the greenback strength against a basket of 6 major currencies, up 0.31% to 94.16. The euro fell to 1-week lows amid concerns that Italy's new government would have to delay a budget meeting planned for later in the day, following reports of a row ahead of a looming deadline to present the budget. It's a row. Investors are also worried that the government will seek to increase next year's budget deficit, which could put Italy on a collision course with the European Commission and investors who would like to see a deficit cut. The Euro USD was last at 1.1718 after falling as low as 1.1685 during the lowest level since September 20th. Fourth thing to know is pending home sales and durable goods on the economic calendar. A flurry of economic data is expected on Thursday, as investors look for clues about the strength of the economy and future Fed rate hikes. The second quarter final GDP numbers were released at 8:30 a.m. Eastern, but little was likely to change from the last report. Durable goods data also released at the same time, as well as jobless claims numbers. Investors are likely to pay close attention to pending home sales numbers for August, which arrive at 10 a.m. Eastern. Housing looked a little shaky in July, but new home sales surprised to the upside for August. Economists expected that pending home sales dipped 0.2% from last month, compared with a 0.7% drop in the prior reading. Fifth thing to know today is oil prices surge amid fears over looming supply crunch. Oil prices surged higher amid a looming supply crunch, with sanctions set to be reimposed on major producer Iran on November 4th. London traded Brent crude futures were up 0.8% to $81.44 a barrel from their last close, not far from the high of $82.55 reached Tuesday, the highest price since November 2014. The U.S. crude prices added 0.95% to $72.27 gallon drum, reapproaching Tuesday's heights of $72.75, the most since July 11th. The impending loss of supply from Iran has seen oil prices rally, and the Organization of Petroleum Exporting Countries and non-OPEC members, including Russia, have little spare capacity to boost output in order to offset falling global supply. Our second story today is from MarketWatch.com. Interest rate hike scoreboard. Fed 8, U.S. savers 1. When the Federal Reserve had interest rates near zero, critics in Congress and on Wall Street would argue that the central bank was waging a war on savers. Few are making that argument now that the Fed on Wednesday increased interest rates an eighth time, yet savers effectively have seen just one rate increase. According to RateWatch, the average rate that savers get on a benchmark $10,000 minimum 12-month certificate of deposit was just 0.43% in August. Meanwhile, the federal funds rate was 1.91% before Wednesday's rate hike. Federal Reserve Chairman Jeremy Powell back in February acknowledged that retail deposit rates were sticky on the way up. They generally come with a lag, he told the House Financial Services Committee. Banks have profited. Net interest income in the second quarter rose 9% to $134.1 billion, with 85% of banks reporting year-over-year increases, the Federal Deposit Insurance Corp reported. Net interest margins rose 3.38%, a six-year high. It's not always the case that depositors fare worse, particularly during the recession. Banks kept savings rates high since funding was scarce. Interesting. Our third story today is from FinanceMagnates.com. U.S. judge rules cryptocurrency is a commodity for the purpose of CFTC case. An American judge has decided that crypto tokens can be classed as commodities for purposes of a criminal case. The U.S. District Judge Raya Zobel said on Wednesday that the Commodity Futures Trading Commission's case against MyBitcoinPay Inc. can go ahead. The latter's lawyers had argued that the former had no authority because cryptocurrencies are not commodities. This decision is important because of the precedent set. MyBitcoinPay, who came up with that one? MyBitcoinPay is a cryptocurrency company which the CFTC alleges to have run a scam. Really? And their name is MyBitcoinPay? They're a scam? Shocking. It is the company behind MyBitcoinPay.com, a website with an online wallet to store cryptocurrency and a digital exchange to trade them. Founded in December 2013, according to the website, it also has its own cryptocurrency, MBC, which it sold in an ICO. It made a total of approximately $6 million from 28 investors. The website promises 1% interest for users that keep their wallets open to mine through staking. It also claims to be based in Wyoming. The CFTC complaint, however, lists the company's base as Las Vegas. It accuses owners Randall Crater of New York and Mark Gillespie of Michigan of using the $6 million to buy themselves fancy things. Money that customers did receive was taken from other customers, Ponzi style. You cannot make this stuff up. Well, if you want to read the rest of this article, because it's pretty damn entertaining, surf on over to theoptionsinsider.com. And that, ladies and gentlemen, is news you can use for today, Thursday, September 27, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.